Welcome to Bauhaus Weekly Wrap-Up, Week 25. 5 months ago, we all watched President Trump pledge peace in the Middle East, hoping for stability. Now, with US bombs falling on Iran, that hope feels distant. At Bauhaus, we get it. Uncertainty hits hard. We're here to help you navigate this storm, protect your wallet, and find opportunities amid the chaos. Let's dive in. US-Iran conflict. Tensions exploded in the Middle East as US airstrikes obliterated Iran's key nuclear facilities in Fordow, Natanz, and Isfahan, erasing decades of nuclear development. Iran condemned the attacks as an act of war and warned of a proportional response. That could mean targeted strikes on US bases or vital oil infrastructure in the Gulf. Oil prices surged more than 10% this week as markets braced for potential supply disruptions. At home, Americans are already feeling it. Gas prices have jumped, and heating bills are expected to spike just as winter sets in. Federal Reserve and economic policy. The Federal Reserve held interest rates steady at 4.5 to 4.75%, despite public pressure from former President Trump to cut rates by a full point. Fed Chair Jerome Powell pointed to rising geopolitical tensions and tariff risks as reasons for the cautious stance. That means mortgage rates remain near 7%. Car loans stay expensive, and credit card debt is more painful than ever. Many businesses are pressing pause on expansion plans, wary of higher borrowing costs. Consumer behavior. Consumer behavior is shifting fast. Kroger reported a 3% drop in same-store sales as shoppers focused on essentials, pulling back on non-essentials amid inflation and tariff concerns. Walmart echoed the trend, citing weaker discretionary spending. Retail stocks fell 4% this week, and holiday sales forecasts are dimming, raising concerns about job growth and the broader economy. Global supply chain chaos. Global supply chains took another hit after Houthi rebels, aligned with Iran, launched missile strikes at 2 US cargo ships in the Red Sea. In response, major shipping firms rerouted vessels around Africa, adding up to 2 weeks and $1 million in extra costs per trip. That's delaying shipments of everything from electronics to furniture, while freight costs rose 15%. Costs that are likely to be passed on to consumers. Tech sector resilience. Amid the chaos, one sector stands tall. Tech. Tesla introduced a new robo-taxi model that's 20% cheaper, sending its stock up 8%. Meanwhile, AI chipmaker NVIDIA soared to a $3 trillion valuation, driven by relentless demand for data center technology. With oil and retail faltering, tech remains a bright spot, attracting investors hungry for growth in uncertain times. Here's navigating the week, how current events are shaping your wallet and what you can do about it. For property management, renters, and landlords, recent US strikes on Iran have triggered a 10% plus spike in oil prices, leading to higher heating costs. At the same time, the Federal Reserve's rates remain high, 4.5 to 4.75%, making borrowing more expensive for landlords. Ongoing supply chain delays are also complicating maintenance efforts. For renters, these developments could mean higher utility bills and potential rent increases. However, there are ways to adapt. Renters can try negotiating for a rent freeze or utility caps to ease monthly costs. Landlords, meanwhile, might retain tenants by offering added perks like free Wi-Fi instead of lowering rent. Proactively stocking up on repair supplies now may also help avoid future price hikes. For construction and development, supply chain disruptions, particularly from Red Sea attacks, are causing longer wait times and rising prices for essential construction materials like lumber and steel. Coupled with elevated interest rates that make development loans more costly, this has slowed down many building projects, especially for small contractors. Homeowners are advised to hold off on major renovations and focus instead on smaller, cost-effective updates like painting or minor DIY projects. Contractors can manage rising expenses by pre-ordering materials in bulk and pivoting to offer energy-efficient upgrades, which are increasingly appealing to budget-conscious clients. For real estate sales, mortgage rates are hovering near 7%, discouraging many potential buyers and slowing down home sales across the board. At the same time, tariffs may soon drive up construction costs, adding to uncertainty. For buyers still in the market, locking in a mortgage rate now could be a smart move, especially when combined with choosing homes that offer lower utility costs. Sellers should focus on making their properties more attractive, adding features like insulation or solar panels and pricing competitively to encourage quick sales. Real estate agents can expand their reach by hosting virtual tours and emphasizing stability and sustainability in listings, two factors many buyers value in uncertain times. For maintenance and repairs, delays in shipping parts like HVAC filters and plumbing gear, combined with higher fuel prices for service crews, are making home maintenance more expensive and less timely. Homeowners should consider handling minor fixes themselves and building up a supply of essential items before shortages get worse. On the professional side, repair providers may need to raise rates to cover increasing fuel costs, but this can be more easily justified if communicated clearly. Partnering with local suppliers is also a smart way to avoid delays and improve overall efficiency. And lastly, for financial strategies, market volatility continues, with tech stocks like Tesla and Nvidia performing well, while retail stocks slump. High interest rates benefit savers, but make loans more burdensome, all while gas prices cut into daily budgets. Consumers should consider placing cash into high-yield CDs, currently over 4.5%, and delaying large purchases until end-of-year sales. Investors might focus on strategic plays, buying tech stocks during short-term dips while balancing with more stable sectors like utilities. For small businesses, reducing energy expenses through LED upgrades or solar power can bring significant savings, and stocking up on essential supplies now can help beat future price hikes due to tariffs. In a week filled with economic and geopolitical shocks, staying informed and taking early action is your best defense. Whether you're a tenant, landlord, contractor, investor, or homeowner, small changes today can protect your finances tomorrow. What's your strategy? Drop your insights in the comments below. And as always, stay sharp, stay curious, and above all, stay Bauhaus. Like, follow, and subscribe to our social media channels for more market insights and analysis.